I want to talk about today the price action charts and how to get into a better price position or a better entry price is a better way of saying it. Now, when I send a signal to the Forex Signal group, it's a general buy or sell, and the better price you get, the better, of course. So what we've seen today is that the US yen has got massive divergence. It's failed to achieve lower lows. It is now achieving higher lows, which is great. And there it's forming a reversal pattern, which we like. And the price has moved above the support lines and started to achieve the stepping stone effect, which we love those. So once we get that information, we can actually put a stop on. Now, where do you put your stop? Well, the logical one is down here, isn't it? Below that support area, giving you plenty of room for the price to breathe. Don't forget you're only risking 2% of your funded account anyway, so it doesn't matter what the stop is. However, some people like to get in a little bit closer to the market. Now this is a little bit more aggressive stop, so you could put a stop here just below the support line with the intention that the price is going to continue up without any corrections. It doesn't always play out like that. That's just what it has, but that's more aggressive. One thing you can be is a little bit more conservative, and you could say that the price is, you could put your stop below that support line there, 1, 2, 3, third candle along, and put it just below there. So it's a personal thing, totally up to you, but either way, you're going to risk 2% of your funded account, whatever the stop is. Now the other thing, of course, is you want to make sure that it's at least 2 to 1. So even if you're there, got a wide stop, so what you're doing, you're challenging the market to change completely direction, which is highly unlikely. It can continue down, of course, and become weaker. That's part of the deal that we're playing. This is how it works. However, the chance of actually this falling at this stage are very, very slim indeed. We've got we've got divergence, positive divergence on the market, indicated by this green line, which is very strong. We've got the price hitting a very high demand area, and we can see by the daily that it's hitting a very strong support line as well here on the left. So we can see the very strong upward momentum trend, and the price is hitting this order block as well at the same time. So we have confluence in the market, and of course our indications are that the future price is going to go up to 161.55. So how can we get into a better trade if that's what you're looking to do? It takes a bit longer to calculate. So if you just want to work 15 minutes a day, as most of you do, I'm sure, then just do this: wider stop, 2 to 1, and then just go and play golf or whatever you do. But you can dive into the 30-minute chart, and you can do this. Let's get rid of that for a second, just so we can see. Now the same support lines appear on the 30-minute chart equally as the 4-hour chart or whatever chart you're using. So that's really, really important. Make sure the settings are correct. That's the key to your success, because these are not standard settings, as we know. These are very special charts designed just for you and a handful of others. That's it. I want to make sure this is exclusive to you, not thousands of people who are out there trying to make money and lose all their money within 6 months. So what we can see from this here, that the price is, we've got several opportunities here, haven't we? First one to note is the support lines here. That's an opportunity, isn't it, to get in? So you could, as an example, say, okay, I'm going to buy at the top there 158.32, and I'm then challenging the market to continue. So you could buy there with a very aggressive stop there. You might have to re-enter, but then you might be better off having a stop down here. Okay, make sure that it's 2 to 1 up there somewhere. So that's one way to do it. The other way you can do it, of course, is use the support areas, but you can also use the stochastic special settings, of course. But as you can see now, we're seeing here the US yen is now overbought. So you can simply buy here, knowing that it's overbought, but now it's oversold. So this is going to be a better price than buying up here. Now I'm not bothered. I have a wider stop. I risk 2% to make 4%. That's it, and I let it go. Much more relaxing way to trade. However, you can of course do it this way. Just needs to be more patient, wait for the price to come down into this area here, and it probably will come into this support area. The danger, of course, is if markets get lively, you could miss that entry point. If you have it there, for instance, and it decides to start make a move, then you may miss that entry point and miss the trade completely, and may need to make another decision later on. Now with gold, a slightly different way of trading, well, exactly the same way of trading, except we go slightly closer to the market. First thing is we need to know is that where is the price in terms of direction. We can see it's achieving higher lows and higher highs, and so therefore we do expect the price to go up into and continue with the uptrend. So once we have the direction, we have get better positions and better pricing, better entries by using the support lines here, which are already drawn. So congratulations yesterday, by the way, if you had that move on gold, a nice move to, where did it go, 24.37 or something. So congratulations. And we can see this morning we had a pull back into support just above the support lines, and then the price moved up. We can see this as a swing low from, this is overnight, so the Asian session took this. However, it's too late now, of course. But here's the thing. Once you get your settings correct, special settings, remember, no one else is using these, and we can actually see where the positions are, where they're going to come down to, and where the big moves are coming. Also note here, this particular tool here, see how wide this goes? Often we see how wide they go indicates that there's going to be a quiet market ahead. It doesn't always work, of course, because we had 300 pips yesterday. But look at this, how narrow this is the day before. So this is warning you to say, look out, this is going much, much higher, as I've indicated in the last week or so. So let's dial down to the 5-minute chart, see what's going on, see what's happening. As we can see, we've got all these buy zones. The turquoise areas are price of interest, demand areas, whatever you want to call them. So we can see the overnight move going up, coming back down. You could do a fib retracement there. It's going to be 50%. You don't need to do it. You can see it. And then the price comes up and comes back down. And here's the thing. These are already set here. These blocks, order blocks already set. And they get extended. You can just extend them to where they've been before. And of course, once they convert from resistance to support, they become support areas, don't they? So you can do that again here. You can draw a line across there, draw a block against there. So this is resistance. Once it gets broken, it becomes support. So you're going to get the action before the price actually happens. So you're going to get the break of resistance 1, 2, 3. Okay, so it's a personal choice how close you want to get to the market. Of course, you can just use the 30-minute chart. You can use the 15-minute chart. It doesn't matter. You can see the order blocks and the liquidity zones much easier, and that's been drawn from the 5-minute chart. So you can dial in and out. Just trying to extend that. There we go, something like that. So as the price breaks this area, we can do this on the, what is this, 15-minute chart. Let's get in there, let's make it a bit more accurate. So there, extended, Once the price gets broken, it comes back down into liquidity. So therefore you can get into the position. Now, of course, we've got a sell zone here now. We do expect the price to give way at some stage, or at least retrace in the next few hours. But nonetheless, a fantastic way to get into your positions. And if you want to get a tighter stop, that doesn't mean you're risking more. It just means that you're getting a better entry price. You're still only going to risk 2% because you need to make sure you're within your 5% drawdown every day. You only can do that if you're risking a small amount of money. So don't forget, if you've got any questions, if you want to get the chart setups and your chart doesn't look like this, then of course we can sort that out for you.